Welcome back, everybody. Got a very special episode for you today. Very excited that I managed to get this guy's attention. He's a Bitcoin OG, and I mean that when I say OG, like 2011. He was there when Richard Hart was there. You guys were probably buying at the same, $30 top, right? And now we're gonna get his take on HEX. It might be very controversial. Who knows? I've just met him, but he seems like a great smart guy, right? You're an ex-Google employee, one of the first, as I understand, and now a venture capitalist and just probably successful entrepreneur as well, correct?
Yeah, sure. I mean, I wouldn't say that I'm a venture capitalist. It just sounds so formal and, so big.
Okay.
I kind of like more in the degen crowd type of person. So, and just a quick story how I got into Google. So I moved to the Silicon Valley from St. Louis, Missouri in '97. And in '97, that was like when the stock market was just like started to explode and browser was invented. And my office is like literally across from the Netscape building. So like all the Netscape people were like
Ah,
walking in, and I'm like, why am I working in this company? I should really be working for Netscape. It's so great. And I think the Netscape version was like 0.97B or something like that. That was like ridiculously low. It was not even version one. And the thinking back then was that, or my thinking, that the stock market ran away from me. There's no way I'm making any money, so I might as well be a consultant,
mm,
forget all the shares, this and that, you know, because Amazon was like $300 a share, which was like seemed very, very high. And so I spent like the next 2 years kind of like thinking about what's happening, what's happening with Nasdaq, why is it so high? And at the same time, so I really liked rollerblading, and I ended up meeting Larry and Sergey of Google at Stanford. They were kind of like rollerblading there too, and we just connected. And they're like, "Hey, we're hiring for this, new company, Google. It's like a search engine that's supposed to be better." I'm like, is this really better? I mean, there's like seven other search engines. There's like Alta Vista, there's Yahoo, Excite, and so I was kind of like very skeptical in the beginning. And then I went home and I tested it out. I'm like, wow, it actually works. It works great. It can find all of the like PHP and Perl methods I was looking for like immediately. There was no broken links and there was no porn spam. I'm like, oh, it's gonna be my like search engine of choice. They're doing something right. So I called them back and I'm like, hey guys, can I stop by for an interview? And that was like summer '99. So they're like, yeah, come on down. So I came for an interview and Larry Page interviewed me and just gave me a job right there. I'm like, okay, I'm coming in
dude,
tomorrow. So was super
dude, your
excited.
your life could be like an episode of. Have you seen the TV show Silicon Valley?
I love that show.
Uh,
I absolutely love it.
that is so
Yes.
crazy to me that you were there at the very beginning of it, and you were a computer engineer, right? So you were like literally building Google, like what we see today. That's
I
awesome.
was I believe I was part of the kind of like I was at the time of the first cloud creation. So in other words, there was no clouds, there was no Amazon AWS, nothing like that. And Google was just exploding with traffic. We keep signing on new clients, specifically Yahoo and AOL. And so our traffic was quadrupling, 10x later. So I was very much pretty much lived out of a data center because I just needed to connect and configure all those servers, and I was receiving them by the thousands. So it was super intense, very hard work. Uh, I wasn't wearing earplugs all the time, and we also had this concept called data center time. Data center time, basically, you spend few hours there, but you actually spend the whole day there. But you think it's only a few hours because you're just so busy just working with thousands of servers. So that was like 99 to 2000. I was the only one running Google networks. So like my infrastructure was like my thing, and there was no one else who was doing it. And obviously the company only had 20 people, but we were hiring. So Marisa Myers started a week later, and Paul Buchai, the guy who like worked on Gmail, started another week later, and I remember configuring their network access so that they could actually start developing.
Wow.
So that's
I
the
can't. It's so
that's the
funny that
background.
you thought Netscape was going to be the winner take all, and you ended up in the right place.
Yeah, well, Netscape was the kind of like very interesting company. I think they were purchased by AOL, I think. I forget. But
Yeah.
anyhow, Netscape actually what gave the internet its accessibility, so to speak, made it user friendly for the rest of the people.
Yeah, some people say Netscape is like, Bitcoin, and then Google might be like Ethereum. So I mean, your whole life. I mean, we were talking a little earlier. It seems like you were just in the right place at the right time for a lot of things. And so I think what people are going to
I
want
would
to ask
say
next. Go ahead.
if you spend uh, somewhere long enough, you just end up at the right time, sometime of the time, right? So it's not like you landed somewhere and like, oh, this is the right time,
Right.
because like in '97, I didn't think it was the right time. It was just simply the time, right?
Yeah.
And in '99, when I met the Googlers, that's just like really just by accident. But it's just because I was here for a long time, right? So
Yeah. So I guess that's what it's like. Luck meets as preparation meets opportunity, right? So people in crypto
exactly.
long enough too, you lose enough money and then eventually you figure it out. But so you were at Google for maybe 10 years before you discovered Bitcoin.
Actually, 6 years. So
Okay.
Google grew rapidly, and so my tenure at Google was uh, 99 until '05. So in '05, I just started to working on personal projects, and I just decided that maybe it's time to leave Google because it's just a very large company, and I wanted to do something on my own. So and I just got other interests in working with a mega network and this like really really huge company. So I just thought that maybe I could start my own company, do something.
Gotcha.
Yeah. So Bitcoin came along. Well, I think it came along maybe '09, '10,
Hmm.
and uh, I was introduced to Bitcoin by other former Googlers who were making fun of it, basically saying, "Look at this thing. It's probably a scam. What is it? You download an exe file, you double click, and all of a sudden, Bitcoin or some numbers just show up in your wallet." I'm like, "Oh, that sounds cool." So I decided to start a mining farm in 2011. So I installed 120 servers in the data center, and I think I was consuming about 10 kilowatts of power, maybe more, maybe 12. And I filled it with video cards, and those video cards were all NVIDIA, and I think maybe 120 to 150 video cards. So immediately the data center temperature like went up 10 degrees, and data center people were like yelling at me like, "What the hell are you doing?" And I'm like, "Oh, I'm just rendering stuff,
Did you at any
rendering some
point
Bitcoin."
were you ever using Google data centers by chance? I'm sure you can't
No,
say.
no, no, absolutely not. I mean, I can say what's true and what's not true. And no, I mean, I left Google, right? So I had my own data center, I had my own project since I was running some interesting compute stuff. So I had space and I had power. So I thought, okay, all this space and power is being wasted. How about I make some Bitcoin? So so I was mining Bitcoin from 2011 until 2013. I think between 2012 and 13, I simply even forgot that I had it running. It was simply running there and mining nonstop. And I had my data center team just like managing it, making sure it doesn't die. So
Right. And that's what we were talking about earlier. That's probably the best scenario was to be able to forget about it, or at least not not care so much about it, right? Because if you were trying to be a day trader, or if you paid more attention, you might have sold early, or you might have gotten shaken out during that $30 to $2 bubble, or at any point along the way.
yeah, well, I think what really helped is that I really didn't think it's going to be much. So my expectations were very low. And being ex-Googler, I didn't have the kind of like the financial pressure to take the profit, right? So I just felt like, okay, it's something's happening. It could be interesting. but I didn't really feel like I wasn't necessarily like a Bitcoin maxi or anything like that back in the day. It was just an interesting project that's worked, and there was some innovation happening, and I just felt like it was really cool to be part of it. So,
Yeah, I mean that's incredible. I mean, you were probably mining at the same time Richard Hart was mining, and not even didn't even know each other, right? Actually, when did you get
yeah.
familiar with Richard Hart?
Uh, Actually, so I got this spam mail with, HEX, get HEX, make 40% APY. So I'm like, oh, I guess we are definitely at the top because I'm now getting, crypto mail
Wait, you're
in
talking
my
about
mailbox.
physical mail, right? Like in yeah.
It was a physical little postcard that was
Yep.
saying uh, Hex is made to outperform the rest of the cryptocurrency, this and that. And the way it was written, it was like immediately told me, okay, well, first of all, the fact that it came to my mailbox has to be a scam, absolutely a scam, because anybody who can afford to do it, uh, likely a scammer. Uh, and so I just put this postcard away, and that was actually a few months ago. So, and then I had another friend who is in DeFi space. He mentioned something about uh, uh, PulseChain, and I really did not connect the two and two together. I thought PulseChain was somebody else's project. It wasn't Hex at all,
Mhm.
or wasn't related to Rich Hart. So I looked at PulseChain. I'm like, oh, that's actually looks pretty interesting. And then I keep getting links back to Richard Hart, and I'm like, okay, well, maybe I should watch some videos. And when I saw him, I'm like, okay, without the volume on, you can definitely tell that he's a scammer. But when I turned on the volume and I started to listen to his interviews, I literally had cognitive dissonance. I'm like, okay, the guy looks like this. There's like Louis Vuitton stuff everywhere,
Yeah.
rotating Rolexes. And yet, I have never heard more intelligent conversation about crypto. And like, how can this be? How can those things coexist? And like, there's something going on there. I should listen to it some more. So that was my early introduction to the project, to Hex.
Yeah, that's cool. I mean, it is kind of it's an IQ test for some people as well. That's what some people call it. It's there's like a bell curve, right? And it tracks the people on both ends of the bell curve, but in the middle, a lot of people can't really understand that. What what he's trying to do, or what we're all trying to do here with Hex, being a store of value that's better than Bitcoin. It's a really bold claim, and so actually, let's rewind. So we're missing a few years, right? So you mined Bitcoin in 2011 or
Yep.
something, somewhere along those lines. But then there's a, 6 or 7, no, 8 year gap before Hex came out. So what were you doing in that time?
So I was running three startups, actually one after another. So I started with a startup called ImageShack. ImageShack was an image hosting company for people who did not want to load their media onto social networks. It was mostly for people who would share images in forums. So imagecheck.com was essentially the website that served a lot of platforms outside of Facebook and outside of like MySpace, though MySpace was a huge user of ImageCheck. And afterwards, what happened? So that ran for a few years. It's still running. It's still in the top 200 popular websites in the world. There's about 2 billion websites in the world, and we're 175 in our. If you look at Moz 500 websites, you'll see that our domain authority is 94 out of top of 100. So we have a lot of users. We have a lot of links, and that's all about media sharing and essentially connecting to people via image sharing. The next company that I co-founded was called Inventify, and Inventify was actually came out of a need for image resizing and image manipulation in real time for e-commerce customers. So I had a friend working at Pinterest, in 2014, and he called me up and said, "Hey, Jack, we have a ton of images at Pinterest. We are running out of CPU capacity resizing them. You guys have something that resizes images on the fly for mobile representation. How about we use your system to run Pinterest images?" I'm like, "Hey, this is great. Pinterest is awesome. I love Pinterest, and definitely there's a lot of traction and traffic coming from Pinterest." So Pinterest was the first client to use Imagizer, and Imagizer was imagizer.com, by the way, is where you can find it. That was the product that can resize images in the cloud by receiving URL parameters that take resolution of the image, how it needs to be done. So responsive images, image resizing on the fly was the solution for the Pinterest problem. And after we got Pinterest on board, we also got Nordstrom.com, so like really large store in the US that used that used the Imagizer. So that was the kind of like the um, I would say the enterprise spin on ImageCheck.com. So ImageCheck.com was more of a B2C, and Imagizer was B2B. And then I also dabbled in some app development. We tried to launch a social platform called Drain App Social that combined kind of like a Instagram, Twitter, geotagging features all in one. That didn't work really well, but we learned a lot about the mobile space. We launched Twitter images. So like Twitter back in the day did not have image hosting platform at all. So we served images to Twitter for at least 3 years. And we got a lot of traction there with the mobile users. So Twitter was using our platform too for mobile image sharing across Twitter streams.
Oh, yeah.
So
So some pretty
that's
important
kind of like the
clients,
story.
Twitter and Pinterest. I mean, it sounds successful to me. And so you've got a
It
track
was
record of
successful at the
success.
time. Well, it was successful at the time, and I knew Evan Williams and Biz Stone from Google, and I knew Jack Dorsey, so I knew them personally because Evan ran the company Blogger back in the day, and Google acquired them. So I met them at Google, and when Twitter got started, we just continued to keep in touch, and that's how we essentially made something work for us together.
Wow.
So
Okay. So yeah, so you're an OG in much more than just Bitcoin. I mean, you're well networked, and so did you ever switch your? I mean, so you're a computer scientist, but did you ever dive into blockchain development at all, or how did you handle that whole thing?
so blockchain development, not so much for Bitcoin, more for Ethereum. So I
Hmm.
really got into
Well, you can't
Ethereum
develop on
development.
Bitcoin, so
Yeah, I mean, you can compile your own wallets and stuff like that, and
right.
do things, or you can clone the wallets too. I mean, like speaking of Litecoin, like what is Litecoin? Like how did they do it? I mean, they
Uh,
just tweaked some parameters, launched their own blockchain, right?
yeah, change the
But
config file,
it's
fork the code.
Yeah, I mean, yeah, pretty much. So you could do that. And actually, I was working on something like that too, but then I kind of like didn't really see the point, so I stopped. So when Ethereum came along, I'm like, wow, this actually is really cool. Programmable money.
Yeah.
Not only you can pass value between the end users, but you can also do all kinds of interesting programmatic things. You can have inflation, have deflation features, this and that. So lots of things you could do. I mean, of course, a lot of people thought that, hey, it's a world's giant blockchain computer, though it's pretty terrible computer. I mean, it's pretty slow. I mean, there's like not much you can do with it. There's no floating point operations of any kind. Like you cannot do 0.0 dot dot dot. So you have to explode the numbers into integers, making 18 zeros to actually to simulate the floating point operations.
Hmm.
So lots of crazy stuff, but it was kind of like exciting at the same time because you're working with very limited capability of the language, and yet you can do a lot of interesting things.
Yeah, well, yeah, when it comes to value transfer, you don't want to give people too much rope to hang themselves with. And it also has to be, fast and efficient enough to settle. And the more computations you do on Ethereum, like it's yeah, you're right. It's basically a slow computer. And the units thing, that's probably why the T-share system in HEX has to use trillions and trillions of shares because they're unable to, put a decimal point in there. Maybe I'm wrong about that, but have you looked into the
Well, I
HEX code?
think I didn't look into the code, but I looked at pretty much everything else out there, and I think one of the reasons for the benefit of having so many billions in the market cap, it actually makes marketing look better. So you could argue that Hex has like under a million holders or whatnot. So the number of wallets connected to Hex is not that. It's actually smaller than Shiba Inu, for example. But again, like Shiba Inu has like quintillion Shibas, and Hex has a little bit less. But both of those numbers are so large, it makes the token value, even though it's trading like, I think Hex is trading at 5.5 cents, where Shiba is trading at 4 zeros and 1, I think right now. It still looks like it's a billion market cap. And for the people who just pay attention to the market cap, they're like, oh, look at this. I'm only investing in something that's over $10 billion in market cap. Here's my list. So I'll buy more of that. I will not be buying anything under 100 million market cap. It is actually a misnomer. People don't understand that they cannot trade market cap. Market cap is simply there. And it's actually measured differently by different leaderboards, like coin market cap measures it one way, then CoinGecko is something else, and then Nomics is something else entirely. But a lot of people are thinking, okay, well, the adoption has to be ginormous if the market cap is in billions. So actually, it makes good marketing sense to do that. And it also makes people feel like if they're buying something for 5 cents, they're not paying $100 per token, right? So that's a big difference. So it gives you a warm and fuzzy that you can immediately buy a million HEX or a billion Shiba, and like, oh look, I'm a Shiba billionaire. I have a billion Shibas. So
and that's
it kind of
interesting
makes
that
sense for marketing.
you were able to catch both of those. There's two things there. There's the market cap, and then there's unit bias. It's way cooler to own a million HEX than to own 0.003 Bitcoin to most people, because they don't understand, that's more of something doesn't always mean more USD. And to be quite honest, I think part of the design intention with HEX from the earliest days was to have a lot of coins. So there's like 600 billion coins, and that number was chosen deliberately to try to move up the leaderboards on the market cap websites. And unfortunately, like you mentioned already, CoinMarketCap and CoinGecko and Nomics, they've all got totally arbitrary rules for how they list market cap. But if you go on Etherscan, real blockchain data will show you the real market cap, which puts HEX in the top 20. If you are being totally objective about it. But CoinMarketCap is not. They're going to count Satoshi's 1 million coins in Bitcoin that's never moved from his wallets, but they don't want to count the origin address coins in HEX. So it's just but in the grand scheme of things, it doesn't matter about the market cap when you're looking at the price. The two things are totally unrelated. But we tried to move up the ranks of market cap on those websites, and we got gatekept in the process.
Sure. I mean, absolutely. And I think at the end, the only thing that matters is I mean, so there's two arguments. One argument maybe is that price stability is good, but the other argument could be is that volatility actually is a feature. Now, the volatility becomes a feature when you stake your coins. And the reason why it's a feature when you stake your coins is because should there be an 88% drawdown, as I pointed on my Twitter stream, you're staked, you can't sell, right? So you can literally bypass the drawdown, and just because you can't sell, right? And it will save you from selling or being liquidated just by your own mind. Like in your own mind, you're like, okay, I'm losing ton of money. I need to do something. It's the end. Sell everything, right? I mean, there is of course unstaking with HEX, but then if you unstake, then you actually end up losing even more. So I mean, not necessarily more, but there's penalties, right? So the stability. I mean, I don't believe there is stability in the crypto markets. in general. Now there are stable coins, right? But we seen what happened to Terra, right? So I mean, of course, Terra was backed by something that was completely, you know, engineered to be algorithmic. It made sense for it to actually to fail. It only made sense for Terra to be stable if Luna continuously appreciating. But as soon as there is a market instability, everything just gets wiped out. So I think didn't they lose like $50 billion, something like that, from the
Yeah.
and that's actually real money because their marketing of their stable product was like, hey, this is stable, you can be safe in that crypto, and that ended up losing people more money.
Yeah, that was very, very sad that, the confidence that everybody seemed to have in Terra, even though it was a stablecoin algorithm that I think had been tried in the past and had failed in the past. And, once the peg goes below maybe 97 cents, 96 cents, and one big institution can push the peg in that direction, then the rest of the crypto market loses confidence. And, there's never been a bigger hack in crypto. It's comparable with Mt. Gox. I mean, probably more money was lost in Terra because there's more market participants at this time.
Right,
And
right.
big institutions like Mike Novogratz, Galaxy Digital, Celsius, anybody even connected to Luna lost a lot of money as well. So that kind of
Yeah.
kicked off the capitulation phase, I think, I hope, of this bear market. I hope we capitulate soon. But yeah, Hex, on the other hand, right, it saves yourself from yourself, right? You're staking because you withstand the volatility that way. But a nice little social side effect of that is that people that are so committed to the protocol, they have nothing else to do. They can't trade, they can't end their stake. They end up becoming long-term fanatics, basically, and then they end up doing self-promotion, and it's kind of a virtuous cycle of people buy Hex, they stake, they realize we're all here stuck together, and so we might as well keep promoting it to more people.
Yeah. Well, I think the markets should go lower. This way, I can buy more cheaper.
Yeah,
So
that's great.
my Bitcoin target is 10,000. That's where I have my limit order set.
Wow. Okay. So you think we're going to go for the first time lower in Bitcoin than the previous all-time high of the previous cycle?
Well, it's not that I think. I'm not thinking about it. I'm speculating that that might be the case. So I'm not convinced one way or the other, right? But I'm speculating due to the fact that it is really in the last 10 years. It is the first time that the quantitative tightening is pressuring cryptocurrency prices. And obviously, with COVID and printed dollars and just the buoyancy of this kind of like economic activity that we have had, pushed everything way, way, way higher than it might have needed to be. And now the roller coaster on the way down, maybe the drawdown might be much, much deeper just because the inflation is real. So like I look outside the window and I can see the gas prices at $7.50 per gallon in California. They're $10 in New York State, right? So the government is definitely removing liquidity from the markets. Now, what does it mean for volatile assets? It just means that if there's no buyers, then there's no buying pressure of any kind that you know might be at $10,000. It may be actually be even lower. It may be $5,000. Totally possible, right? It doesn't actually mean that the asset is worth $5,000 at the time, right? But it may mean that there's simply no buyers within that time frame. So like 2 years ago, barrel of oil went negative. I think it like went negative $30, something like that. That never happened before. Like how can an asset be negative? Like when you buy a barrel of oil, like they
You
actually
get
pay you to have it,
Yeah, that's
right?
ridiculous. Yeah.
Like how's that possible, right? So after seeing that, you can imagine that anything is possible
Mm.
in the markets where the traders are playing with their money.
So is the only option at this point, like I feel like we're backed into a corner, and the only option is for new money to come in is for the government to print more money. And you've been around for a few cycles in the macro scale by now. So
Mhm.
what's left to do? Do we just print our way out of this again? Next year we go back up and just keep printing forever?
So I think I don't think we need to print anything, and I think we should just let the cycle play out. Now, there's the big difference between the economic output, inflation, and how much money you have in your pocket. Those are three different variables entirely, right? So United States has very strong economy. The labor market is very tight. So in other words, what's happening now is that if you want to work in McDonald's, you're going to be making $25 an hour. That's like never happened before. And so it's like this for many other things out there too. So at this point in time, we shouldn't print anything. We should just let the economy slow down to a point where it's not crashing. And by crashing, I mean like the companies actually close doors and they fire all the employees, right? We don't want that. But we do want the demand for the goods and services to be lower so that inflation does not run away from us. Now, what does inflation really means in the real terms? It means price instability. Price instability basically means that the things that you want to buy, you cannot buy because your friend or your neighbor out there is buying it for 25% higher, right? So the demand drives price instability, and price instability is bad for business because first of all, you can't hire people all of a sudden without paying them a lot more money. So you end up spending more money than you have to. Then you have to raise prices on your products. And you can. Like for example, a year ago I tried to buy a car, and anywhere I would go, they would say it's going to be $25,000 markup everywhere. I'm like, why is this the case? Like, what's happening? It's like, well, first of all, everybody wants to buy a car today, and there isn't enough cars being made because of the chip shortage, right? So that's price instability. It's bad for business. Like it's really bad for the consumers, and it's obviously bad for the manufacturers as well because they cannot make enough money. So everything's unstable. So what we need to do is we need to get to a point of stability. Now, it doesn't actually mean that we need to print more money or make less money. It just means that we need to convey to the market that that the overheating of the economy is unacceptable. So that's like my economic view on this.
So basically, just let the bubble burst, blow off some steam. Everybody realizes the new price of things, and once that stabilizes, like once the actual value of the asset matches what it's actually monetarily worth, then we can continue to have another bull market.
Right. Yeah, I think what we need to do is we need to find a floor, and the floor will be found when the prices are no longer spasmodic, like they're not moving up and down like so rapidly. Like if you look at Nasdaq, on Monday it's euphoria, it's 3% up. On Tuesday it's a huge bear sell-off, it's like negative 2.5%. So it's literally it's just like moving up and down without like any sort of conviction.
Yeah.
So it's great. It's a great market for speculators. You can make a lot of money in this market. So I use a lot of derivative instruments to go short and to go long at the same time, and I just end up making money on the market variations. So not necessarily on things going up or down, but rather moving rapidly within a particular range. So that's actually quite fun and works really well.
Interesting. Well, yeah, I mean, it's probably only for people that are smart enough to do that. I wouldn't recommend trading volatility to just anybody, but yeah, everything is cyclical.
Well, I'm very much aligned with Richard Hart saying that don't trade, just don't trade. I mean, trading will you're gonna get wrecked for sure. I mean, when you're trading, you're almost always trading against you. You're trading against your own emotions of putting your hard-earned money into something and then watching it go down 10%, then you're selling it too low, and then it rallies, you're buying it too high, and you're almost never winning in any way if you're trading. Now, if you're putting money in for a long term, you actually bypass this sort of like what I would call lizard brain, like this little circuit in our minds that's responsible for, dopamine control and being fearful and being ecstatic, right? So if you remove that, if you stop energizing that circuit in your brain, you just end up investing rather than trading. Trading almost never makes you any money. So you can trade against other people. Like you can say, I am selling volatility when everybody's buying volatility.
Mm.
So you can trade options. You can underwrite options against the market
Hmm.
like that, and you can win. But you have to be pretty advanced. But for 99% of people out there, I think HEX potentially is a very well structured uh, crypto that you can put your money into.
Speaking of that, so where do you have your limit orders for the bottom? You don't have to admit it, but
I can tell you for HEX, you mean
yeah.
1 cent.
Wow. Ugh. Get ready, guys. Get
It's
ready.
just the limit order. It's just the limit order. Again, this is a
Yeah.
speculation on the volatility. So Richard himself says that it can go down to zero. At any point, it can hit zero, right? So I have a limit order there because 1 cent is a nice round number. I think it may hit there. I will buy a crap load of it, and then I will write it up back to 5 cents. So that would be easy money, right? Why wouldn't anybody do that?
I mean, I think that's
So
a great idea. I think, I'm not going to say exactly where my limit orders are, but definitely, the 3-5 area. And I'm hoping it doesn't go lower. But when you have the ability to sit back and relax, when you have some nest of financial freedom, you don't have to act impulsively, and you can afford to be an investor. But I think the mindset that people like us have is not everybody starts off with that mindset. They think they need to make money soon and right now because money is scarce to them. So,
right.
but HEX saves you from this, right? Because of the staking mechanism, you're forcing yourself to invest, and you shouldn't be staking if you really need the money now. Um, but really, I think that's the psychology of staking. So,
Yeah, well, I think if you need money now, you shouldn't be in crypto to begin with.
absolutely,
So by the way, there's another way to acquire HEX with less risk. So
yeah,
let's say that you're wrong about your limit orders and you just don't know where exactly is a good time to buy. So you can go to Uniswap and you can set up a liquidity pool with your USDC against HEX to buy HEX from 2 cents to 5 cents. Like you can do it right now. You can literally set up a liquidity pool that will be buying HEX between 2 cents and 5 cents. And what will happen is that as the volatility presents itself, you will be earning fees and you will be able to get better price execution. So you will not necessarily need to guess where the price is. Somewhere between 2 and 5, I think 3.5 cents is going to be your average purchase price. And you will end up making people pay you uh, essentially um, the fees that other traders are paying you on execution, right? So you end up
mm,
selling volatility and earning money on the price movement. Like this week alone, I think it went from 4.8 cents up to almost 6, and it
yeah,
and it made that trip 5 times. So your liquidity pool could have made 5 times more money and would have generated yield for you in HEX and in USDC, managing the sort of acquisition of HEX. So that's one way to do it.
yeah. I mean, that's an advanced way. I don't recommend that to most people, like, unless you really know how liquidity pools work. But you're absolutely right. There's one comment that they wanted to correct us on this. So technically, on a decentralized exchange, actually a coin cannot go to zero. It can only go to the smallest available unit, right? Because the price is based on the ratio in a decentralized exchange. It's the ratio of one coin times another coin, or divided by another coin. So it can go to almost zero, but not quite. So
Well, almost zero is pretty much zero.
yeah, if you
I
round
mean,
down,
if
sure.
and it also it depends when you buy it. So if you bought it at 10 cents and now it's 4 zeros and one, what is the difference between a 0 and 4 zeros and 1 for you?
I know
Right?
we're just arguing like semantics at this point. So
Yeah, yeah, yeah. If you're down 99.999%, you may as well say it's 0.
yeah, yeah.
So,
But you don't see HEX going to, I mean, I don't see any cryptocurrency going to truly zero, really, or
no,
any of the
I
big
mean,
ones.
no. Well, when I say 0, it's really just a figure of speech, right?
Yeah,
So,
yeah.
I mean, but even though we have seen oil go down to negative $30, I mean, it went beyond 0.
Right, but that's a manipulate. That's all balance sheets and government and you know the digital
No,
numbers can't go below 0.
Yeah, but that when it comes to contracts in financial instruments, this actually can happen. So the numbers in math technically cannot. I mean, but the rules in economics dictate that under certain circumstances, below 0 is possible. Like especially when people are shorting with leverage. If you short with leverage, it absolutely is possible to go below 0.
What do you mean by that?
So, well, let's say that you have $1 million, right? And then you're shorting Bitcoin with 100 times leverage. So you shorted Bitcoin with 100 million, right? But I know that Bitcoin is worth like 600 billion right now, so it's 100 million. It's not going to do much. But for the sake of argument, when you borrow 100x your money and some sort of event happens, like United States bans Bitcoin or something like that. So what will happen is that the spiral of the downward pressure can put people into a negative balance. So, like in other words, the money borrowed will push the price below 0 because
on
it
paper.
isn't your money. Sure, on paper, but if it doesn't recover, paper becomes reality. That's the problem.
So they're left owing more money than they actually originally started
Yeah,
with.
for example, like so I put up $1 million to secure $100 million loan. I really need to repay it. If something goes down 50%, now I owe 50 million back. Now, in case, I mean, of course, there's liquidation mechanisms. But what happens when the price moves so quick, the liquidation mechanism does not work?
Yeah.
Like for some reason, right?
Well, that's why
You
BitMEX
still
shuts
owe.
off their servers. They literally will turn off the servers when things are overheating too much, so that
Yeah,
doesn't
for
happen.
sure.
Yeah,
For sure. I mean, it is. If it happened to the oil, and oil is almost always leveraged, it can happen to anything that's leveraged. So I don't think it will happen, but it can happen.
That's interesting. Yeah, I've never actually heard that take before, but that would be a doomsday scenario. I don't think it'll happen, but knock on wood.
Well, if it happens, I'm buying. If it happens, I'm
True.
definitely buying.
True. Speaking of that, so when did you? So clearly, for anybody that fell for the clickbait, it's Bitcoin OG Jack Levin it has invested in HEX, right? So, when did you first invest into HEX, and what made you pull the trigger? I know it was the postcard, and then PulseChain, and then watching some Richard Hart videos. But when did you first buy HEX? Do you remember like what day, what month, and what made you?
So I actually don't remember exactly when. The only thing I can speak for is that I have a liquidity pool active, buying HEX right now.
Okay.
So you see the difference. So the difference is that okay, you're buying HEX with a limit order or with a market order, right? I almost never do that. I just open liquidity pools and I set them up to trade on volatility, and I just buy it lower, lower, and lower.
Wow.
And I earn fees doing it. So that's how I always do it with any trade.
Yeah, that's cool. I don't think I've ever met anybody that actually uses, in real life that actually uses that method to accumulate. But you're basically always taking the other side of the trade, and in the long run, you're going to accumulate more HEX that way. So that's pretty good.
Well, basically in the last whatever 6 months, I was able to accumulate HEX with the trading fees. Like at least 50% of all HEX got accumulated with the trading fees. So that actually means that people are literally giving me HEX and USDC for free.
Yeah.
I mean, of course, I am there to present price stability in a sense. If everybody pulls out or everybody's selling, I'm there to buy, right? And
Yeah.
I end up buying dips pretty much everywhere. So, um, and by the way, at this point, I'm very low on cryptocurrency. I almost all, I sold everything above 30,000. So,
Okay.
so I'm not even holding Bitcoin.
Wow. Wow, that's crazy. So all the Bitcoin from all that, back in the day, are you just, you don't see the potential price wise, and that's why you
Of
sold
course
it?
I do. Of course
Oh,
I do. Just not within the next 6 months.
okay.
So
Fair
within the
enough.
next 6 months, I'm likely get it lower, buy it lower. So that's why I have my limit order set at 10,000.
Yeah, I mean that's very close to Richard Hart's call. He's calling for 11,000. It would be chaos, but we're all here for it. We all have to sit and watch. So
Yeah, absolutely. And again, like one of the ways to do it, I mean, you can have a limit order or you can have liquidity pool that buys in the range between 5,000 and 20,000. You can have that pool out of range at
mhm.
this point, but when the push comes to shove and the price falls there, you'll be there to pick it up and earn tons of fees doing it. So
That's a smart move. That's a high IQ level move. I don't think a lot of the chat is going to be able to replicate that strategy, but it depends how much money you have to work with, and if you actually know what you're doing with liquidity providing. Because some people would get scared about impermanent loss. Um, how do you handle impermanent loss?
the permanent loss, well, that basically happens when the underlying security, or I wouldn't say security, the underlying crypto keeps falling, falling, and falling, right? So there's
Mhm.
one way to deal with it. First of all, you set your range wide enough. So, like for example, for Bitcoin, you just set it like 1,000 to 20,000. So your average purchase price is going to be 21 divided by 2. So we're talking about literally $10,000, 0.5. So 10.5
Yeah,
is your average buy. So you wouldn't need to worry about the permanent loss, because if you believe that it's not going to go below 10 or will just hang out in that range, then the permanent loss is not an issue. That's one way
yeah,
to do it. The other way to do it is that you set up your liquidity pool on Uniswap, and then you go short on the same currency you're trying to, or cryptocurrency you're trying to buy somewhere else. So you can leverage your shorts, you can do perpetual futures, or you can do options, like you can do puts. This way, you're buying it and earning fees on Uniswap, and you're protecting your downside with a put option somewhere else.
yeah.
That's what you can do.
That's complex, but yeah, I agree. So if you're selling a put, you actually think the price is going to go up, right? If you're buying puts, you think the price is going to go down. That's
Yeah, you would buy a put, and then you would open a Uniswap range to buy it lower.
right.
So if you're wrong and just continues to fall, then your put will protect you. But if you're right and it just stays there, your put eventually will expire worthless, because you're not going to be able to execute it. However, you're going to earn all those fees, and those fees will pay for your put.
Yeah,
So it's like free insurance, right?
that's
Which is
cool.
amazing.
That's an advanced strategy. I like that a lot. I tell people just to do limit orders just because it's simple enough. But yeah,
Yeah, limit orders are fine. I mean, you just need to like. I mean, the problem with the limit orders is that you end up thinking, okay, what is the limit order price should be? You just don't know if you're getting that price
yeah, you're just
accurately.
guessing.
Like, what if
Whereas
what
if
if
you
what
set,
if you're wrong, right?
yeah, the nice thing about
Yeah,
Uniswap V3 is you get to choose a full range of liquidity. So you don't. It's like setting a limit order within a full range. So um,
yeah. I really wish there was something like Kujira. Are you familiar with Kujira? So
Quadriga.
Kujira was a Terra network system, and it was a DeFi. But the way it would work is that it would actually play an arbitrage game for liquidations. So anytime somebody gets liquidated, you actually take on a portion of their liquidation. So imagine this, imagine a week going down rapidly. So Kujira would identify that somebody is getting liquidated and you would buy only then. So anytime the price moves rapidly down, you just end up picking up the bottom of it. Now, if the price going down slowly, nothing gets purchased. So if there's a slope down, you're just waiting for an event that triggers like 10 to 15% difference between the spot price and the next 5 minutes, and you only buy that dip. So you end up buying local dips and getting better execution. So if Uniswap had something like that, that would be amazing. That basically means that you're only buying when the market is panicking. If the market is orderly selling, then you're just waiting for the panic, and then you buy only when there's a panic. So the probability of you earning more return on the panic is much greater because panic is almost always short-lived, right?
Yeah.
Where a descending sloping price of an asset just you just don't know when it's going to stop, right? Where the panic comes and goes.
Yeah, liquidations are a good metric for panic. I never thought to, conflate those two, but that's pretty cool.
Switching topics a little bit, have you heard of the news that there was a bipartisan bill this morning about crypto being treated as commodity and not a security?
I heard that there was a bill passed by Lummis that it focused on Bitcoin being a commodity, but then it left a lot of altcoins out and suspect to be securities. Is that the
Well, of
bill?
course. I mean, you that's actually great. It's a great move, and it's actually good for Bitcoin. And I actually agree that a lot of altcoins could be treated as as securities for the
Oh yeah,
simple fact. And again, it's something goes like this, so that you're trying to issue something that's worth zero. So you issue an altcoin. You promise people the moon, like you tell them, hey, we're working on this, this, and that.
yeah,
So there's promise of work and there's promise of de facto pump of the coin, and you're telling people that they're investors in your venture, right? So that's definitely a security, and it's almost 90% of the time, yeah, you get into the rug pull situation.
I
So
agree.
where with the Bitcoin, it's something else entirely, right? It's already out there. There's nobody pumping it in this way. So it's more of a commodity. So it's similar to gold, maybe oil, maybe a metal that's scarce. Where if I go ahead and do an ICO or release a coin promising that, hey, I'm gonna do great things with it, you should buy it, right? That's a
Hmm.
security.
I agree, and that's also what. So with this new legislation, yeah, I think it is good for Bitcoin. I hope that it accurately justifies and separates the altcoins that are securities and aren't securities. Like for example, Binance is being investigated right now. They launched a blatant ICO, so there's a very good chance that they could be deemed a security. Ripple has been ongoing investigation for a long time. They've been dealing with a lot of litigation. But then there's the counter argument that it's just best if no cryptos are securities, because once they once one becomes a security, then everyone becomes a security, then every single exchange has to get their broker dealer license, and it's just mass surveillance. So I think that people that prefer privacy and anonymity and freedom tend to not want things to be securities. But I think in general, more regulation and more clarity is a good thing. I just hope that it leans in favor of fairness and not just everything is a security, right?
Yeah, yeah. So I agree. Unfortunately, I think that the centralized exchanges they play a detrimental role in cryptocurrencies being called securities because they literally pump the new listings. Like they create all kinds of games and all kinds of rewards around something that they list. So they're almost active participants in causing the uh, cryptocurrencies being deemed as securities because the way that they're presented, like for example, you cannot do it on Uniswap. So if everything was traded on Uniswap, there would be very little danger and scammy behavior by uh, popular cryptocurrency exchanges, and all the big ones, they all do it. Like I get this almost like gamified solicitation from KuCoin saying, by the way, we just listed this, and if you stake it for 3 days, we're
Yeah.
gonna give you another 15% of
Yeah.
it,
Trading
right?
competition. If you trade this much, you'll win $500.
Exactly. So
Yeah.
they have leaderboards on their bots and everything like that. So that sort of behavior is like almost asking for regulation because people will lose their money for sure. That's like pretty
Yeah.
much guaranteed.
I agree. I mean,
So when you
these exchanges are terrible. Uh, yeah. Sorry. Go ahead.
Yeah, so I'm very much in favor of just using Uniswap because Uniswap is so transparent, and that's like one thing that really attracted me to Hex is that if you go to Nomics and you sort by transparency, Hex is like number 6 or number 7, or maybe even higher than that right now. It's like 95% transparent.
Yeah.
So in a decentralized world, and if that's the goal where we're trying to move, that's how things should be, right? Things should be
Yeah.
transparent.
Right. Crypto
So
was or Hex was invented under the ethos of a lot of what crypto forgot. Real anonymity, real self-sovereignty. Richard Hart screams at people, "Get your keys off of exchanges," and everybody, all the plebs are asking, "Oh, when are we going to be listed on Binance?" It's like, it's still a fair game when we're not listed on Binance, when it's retail friendly and it's on transparent exchanges. Right now, 98% of volume is on Uniswap, and only a very, very
yeah.
small sliver is on centralized exchanges that you can't track those exchanges. You don't know what they're up to, if it's wash trading or fake volume or anything like that.
Yeah, that's exactly right. So if I was somebody's financial advisor, which I'm not, so I'm not making a financial advice right now, but if I were one, I would say if you were to buy anything, you go to Nomics, sort by transparency, and only put your money in places that are
Hmm.
transparent enough. Because with transparency comes accountability, right? Because if somebody is doing something, then it's immediately discovered by the community because it's just so transparent. So you have
Hmm.
the community leaning in into kind of the truth behind trading and truth behind manipulation, if there is any manipulation. But you cannot do it on any coins out there that are traded on in a gamified fashion on centralized exchanges.
Yeah. Yeah. And actually, going back, this is kind of linking to securities legislation again, um, but also kind of just transparency in general. Uh, it's ironic that a lot of people criticize Hex for the origin address owning the majority of the coins. And I think the reason why they do criticize it, and I want to get your opinion, but I think that people are so used to promises. People are expecting promises, and because all of a sudden this origin address and Hex owns a large portion of the supply, 90%, maybe more. We're very transparent about that. We admit that, yes, there is this origin address here, and no, it's not going to make you any promises. I'm sure it would love to make promises and say, hey, I'm never going to sell. I'm going to only use the money for the benefit of Hex. But if it does, then it becomes obviously a security, or at risk of being a security. And people just can't understand that. But I want to try to explain to people that centralized ownership is actually not a bad thing, especially if you can read between the lines a little bit. But what's your take on the origin address?
That's an interesting topic. So I think the biggest issue with an origin address is is not the promises or anything like that. It's the credibility of the entity or the person that controls it. So we kind of know who Richard Hart is, but do we really know people behind their outward appearance? Like we may never know who anybody is and what their agenda is. That's just impossible. So that's a fact, right? So when somebody controls a very large portion of something, right? There is definitely a question like how much do we trust that person who has that much power? Now you could argue that in any listed company on Nasdaq you have to trust founders not to be assholes, right, and not to
Exactly.
do something against certain things. I mean, but then you can have a counter argument and you can say, well, anything that's listed on Nasdaq or whatnot is actually under regulation, right? So crypto is not regulated at this point, not as much as any stock out there. So at least you can say that if Elon Musk, blows a gasket or something like that and does
Yeah.
something crazy, the board of directors will stop him from acting against the interest of the investors. Now, in crypto world, there's no board of directors, right? There's no checks and balances of any kind. All it is just is that we trust or distrust the person behind the project, and that is all. So when an origin address controls a lot of crypto, that is obviously we have to put a lot of trust before we put the money into any crypto out there. So, and that simply is true for any person, not necessarily just Richard Hart. I mean, if I had the same project, for example, then I mean, what would I need to do for people to trust me, right? So I would need to do something, right? But ultimately, if no one trusted me, then having a huge origin address would definitely not be helpful.
Yeah.
But that's just like axiomatic, right?
Right. But what about this hypothetical scenario? So let's say, legislation comes down hard on HEX, or Richard Hart just decides to say, you know what, guys, all of this HEX is locked in a trust, and I promise not to spend it, or to only spend it on things that will benefit the product. And I hereby declare myself a security. So now, we are a registered security. Would that be good overall? I mean, things can still operate. We've seen EOS become, a registered security and still continue to operate in the digital asset world. Would you still think of HEX the same way, though?
No, it would be something else, right? It would be something else entirely. And I would say it would lose a lot of its fans, right? But
Yeah.
on the other hand, it could attract institutional money. So you would have to like think about those things. So
That
if
might
something
be
is regulated, yeah, go ahead.
that might be the move one day for Richard Hart. He might say, okay, retail, you had 5 years, 8 years to get into HEX. Now I'm just going to go ahead and sell out to institutions, and then HEX can become more stable, more secure. We can do our promises. I'm just speculating here, but it's interesting.
Yeah,
Yeah,
I mean that's one way to do it, but then you would not end up having those mad gains if you bought at 0001 and rode it to 40 cents.
yeah,
So, I mean, there's pluses and minuses. I mean, in this particular case, I'm more, I guess, more degen. Like I'm against. I mean, I don't care about investing in something that's regulated or as a board of directors or whatever. Like that's just like not that interesting,
hmm,
right? I would rather. I guess it's more of a gambler mentality. And let's get that straight. Any money you put in crypto today is gambling, no matter
yes,
what anybody tells you. So, and that is the truth, right? So, but some people like that. I mean, I certainly do like it, but you have to kind of like really manage your own mindset in terms of what the hell you're doing, right? But then, I mean, of course, the strategic benefit of HEX and putting money into HEX is that you're given tools to perform better than the market simply because it has the features that kind of like remove that lizard brain circuit in your mind to wanting to trade it constantly, right? So as he mentioned, as Richard mentioned in some of his videos, it does have a number of what he calls pumponomics, right? So pumponomic
fundamentals.
number one, pumpomentals, yeah, pumpomentals, sorry. So pumpamental one is that the resource must become scarce over time. Fundamental two, game theory basically involves people buying and you're competing against stakers. So if I stake very little, I'm competing for rewards with somebody who stakes more, right? So that's
Yep.
kind of like a prisoner's dilemma situation in game theory. In this particular case, this is more of an investor's dilemma
Hmm.
where you just do not know who you're competing against. However, because it's transparent, you can look at the leaderboard and say, okay, this is what's been staked. Therefore, I have to stake as much or more, or as much or longer to actually get benefits. So that's very interesting. That's another way to maintain the price stability. So I think his theory on having less sell pressure is very sound. But I think it will work better when there is more people staking, not just 10%. So right now, I think 10% or maybe 12% of all HEX is being staked, and the rest is just floating around.
Yeah.
So if there was more people, let's say 30 or 40% staking, then it would be even better for the price stability, or rather the absence of the sell pressure.
Well, yeah, that's my metric also, that I prefer to use the metric of active stakers to decide the success of HEX. Because it's easy to game the system. You can airdrop one HEX to 100,000 wallets and say, oh, look, 100,000 people own HEX. But wallets, number of wallets and number of users doesn't necessarily matter if the users are only liquid. So we see the number of active stakers increasing every day. It's nearing 100,000 right now. And I think that's probably critical mass, to ensure that, the future of HEX, the snowball keeps rolling down the hill, basically.
Well, the other huge benefit for HEX is that I don't think it's being shorted. So because it's mostly on Uniswap, first of all, there's no margin trading on the Uniswap unless you do some sort of a derivative, and there's no leverage. So, like in other words, I cannot go and do 100x leverage shorting HEX right now. So that's technically, in the long term, is an amazing feature, right?
That's
And
coming in PulseChain. That's coming. There's people building borrowing and lending protocols, so you'll be able to short HEX all you want.
okay, that's fine. Uh, it will, of course, increase price instability. I mean, that's one argument. The other argument would be is that if there's more participants, then the market will end up deciding uh, better spot price for it, right? So the volume technically will lock the spot price in a tighter range, where with the absence of volume, things are moving around. But then the volatility is no longer a feature, and you cannot get mad gains by buying it really, really low at like 1 cent and riding it to 10.
Yeah, well, that's why we're so excited about it right now. Is the volatility is the feature right now. Maybe one day it won't be, but even if HEX was a stable coin, I've said this before. If HEX was stable at $100, let's say, the amount of APY that it would be earning is still attractive, because where else are you going to get decentralized, trustless yield in that manner that can beat inflation?
Yeah, well, I think one of the most interesting counter arguments against HEX is that people are saying, how can it make any money? Because it's literally printing itself, right?
Yeah.
So
But I think those people are using
that
they're using the idea of that inflation is either good or bad. They're thinking too binary. It's like inflation is necessary to meet, static or increasing market demand. But it's bad when it becomes out of control. For example, the Federal Reserve can print as much as they want, and there's really no. So in HEX, it's a stable 3.69% inflation rate, and effectively, it's actually less because a lot of the stakes don't end in 1 year, in the same year. A lot of the stakes end multiple years from now. So I think we've effectively realized about a 2.5% inflation rate, which is fine as long as new people are coming into the system, like everything.
Well, I would say the biggest misconception is that regardless of the rate of inflation, if money or coins being printed out of thin air, people always question the validity of the price appreciation. That is always the case. So,
True.
but what people don't realize is that the float of the active coins out there or tokens out there is really proportion. There's really two variables. There's the buying pressure and adoption in the overall crypto industry that pushes everything higher. So when Bitcoin goes higher and Ethereum goes higher, Hex likely will go higher too, right? So you could argue that the whole crypto market being in the process of adoption actually good for anybody out there, including Hex to a large degree, right? And for that, you absolutely do need inflation, because inflation has to reward certain behaviors, right? You could argue, okay, let's say that there's zero inflation, right? But then basically the asset becomes too scarce and the price becomes too unstable. So inflation has to be, I would say, lower than the adoption rate. So if the adoption rate is 5% and inflation is 2%, then the price should move higher in a stable fashion, always.
Yes.
But not too high too quick. Because what happens is if anything moves too high too quick, like let's say any asset out there, crypto asset, moves 10 or 15%, what will happen is a bunch of bots, our bots, or just bots that look at the price and volume, going to jump and push it even higher. So anything that just moved 15%, gonna actually end up moving 50%. And then the other R bots will sell the top and everything will go crashing back down. So that what happens when there's very, very low volume and low liquidity and very
I mean,
very little
that's what we're
information.
seeing right now. You know, that's we saw a 90% dip, and that's because of relatively low liquidity, low volume compared to things that have been around a while like Bitcoin, right? But that's also, again, like you mentioned earlier, that's kind of a feature, right? That's not necessarily it's just the environment
I
that we're
like it
playing
being a
in.
feature.
Yeah,
Yeah, I like it being a feature. So I think it's awesome when COVID happened and the stock market sold off rapidly, like in a month. Buying oil companies was like absolutely a steal. There's a company that I bought at $4 a share, now worth $60 a share,
yeah,
right? I still hold it, and it's just amazing. So that was an opportunity of a lifetime to do it. And I think people shouldn't really be scared of the bear markets. People should treat bear markets as opportunity to be patient and load on interesting projects that are trading at very, very low prices. Like anything below like 90%, I would argue if somebody says, hey, you should buy everything that's 90% below the top, that's actually a misnomer. You shouldn't do it. You should really just wait for the macro event. A macro event would be quantitative tightening played the role in removing excess money from the economy is slowing down, and prices stabilizing. At that point, you should look at things that are 95% below their peak, and then you start buying really legit projects. So,
right. Only
but until
products with
then,
project market fit, right? Yeah, like you said, legitimate products, not just because they went down 90.
right, right, because they likely end up being at zero because all of their founders are, pumped and dumped and left, and it's just a
Right. If it's
residual centralized
yeah,
exchanges pushing prices around. I mean, like look at Luna, right? Like, have you seen what's happening with Luna on the centralized exchanges? Like, so Luna crashed completely, and they stopped the blockchain. Like, like the blockchain was stopped. Like nothing was transacting on Terra at all. However, on KuCoin, you could be trading Luna, right?
hmm.
So I bought Luna just for the hell of it at quadruple 01, and then it went up
Full
to
degen.
30. It went up to 3 zeros and 4, right?
Yeah,
That's like 400x in just a week,
yeah.
right? So what does it have to do with Terra project? Absolutely nothing, right? It has everything to do with the market manipulation.
Hmm.
So there are ways to make money like that too. I mean, if that's, if you want to gamble and it's fun for you, by all means. I mean, you may end up losing everything, but hey, you may end up making a ton of money too.
That's first of all, I'm glad you made money because a lot of people tried to catch that falling knife and then it dropped another 99% and then another 99%. So that was such a that was too degen for me to be able to participate in, and also I didn't want to recommend that to anybody either. But yeah, some
No,
people,
it's ridiculous. I mean, you
yeah,
would do it if if you're completely bored out of your mind and you have money to burn and you're just and the casino is too far away, right? So you just log in and
yeah,
log into
yeah,
KuCoin or log into FTX and
yeah,
get your dopamine rush right there. I mean, I wouldn't recommend that behavior to anyone, but it is
yeah.
available, and I think that's why a lot of crypto exchanges is like a toxic environment for the human mind and your wallet. So
Yeah,
that's why I'm such a
centralized
big fan of
exchanges are,
Uniswap.
me too. Yeah, centralized exchanges suck. And in Hex, we say that all the time. Get your coins off of centralized exchanges. You know this. I mean, you're into Hex as well. So, and yeah, I think the moral of the story is there's risk in everything, right? No matter what you buy, there's going to be risk in terms of the price volatility, price instability, volatility, whatever you want to call it. But it's more about having the information on your side to know that in the long term, that risk turns into reward because you have the right
Yeah.
information and you're buying, something audited, something with 100% uptime rather than something poorly designed or something that's a blatant rug pull. Sometimes the developers just scam away, and take all the money.
Sure. Well, I think one of the things that really got me interested in HEX is this one thing that I think a lot of people don't realize. So what HEX is, it's a model of cryptocurrency mining, except it's done in software in such way that it is a proof of stake because you're staking and you're mining your rewards technically. I mean, you're earning them, but you could say it's
Yeah,
literally a virtual system that lives on top of Ethereum with its own rules, and you're mining for scarcity or resource that's scarce using game theory against other miners or earners out there. And
sure. Your
that's
stakes, your
super
T shares
interesting.
are like your miners. Like essentially, the T shares are virtualized mining machines in a way, but that don't use
Yeah,
electricity.
exactly. I mean, and I think that's an incredible type of thought experiment, and that's why I think it will be successful in the long term. And also, I'm a big fan of the simulation theory, like that we live in simulation.
Me too.
So simulating proof of stake on top of Ethereum using, tokenomics is just an incredible idea. I think it's awesome.
Yeah, it's isolated, so we don't have to recreate a full network. If we want to store value, that can just be the application. Like it's an app on top of the network, so it's abstracted. It's actually safer.
Yeah. So I wish there were more projects like that, actually.
Yeah,
So
there's very few other crypto projects that I'm really interested in. PulseChain, PulseX, a couple of other things. It's hard. It's hard to come by.
yeah. When do you think PulseChain is going to be released?
Oh God. I'm hoping for the end of June, but I've been saying end of May, end of March, end of April. Uh, there's always
My my
delays.
prediction, my prediction is 2023.
No way. Well, hey, I mean, you're a developer. Maybe you have a better. Have you checked out the GitLab at all?
I did.
So you saw the issues and you're like, okay, this is going to take a while.
It's not just that. So uh, it's actually economically better to do it in 2023 when the quantitative tightening uh, plays out. So in terms of finding a floor, you don't want to release a project into an economic situation where everything's just going down. And there's a lot of
Mhm.
criticism of assets like crypto assets. Let's say Bitcoin hits $10,000 in 3 months, right? If that's the floor, that would be the perfect time to launch PulseChain, but not until then, right? Because what will happen is that the buyers will come into the market and will push everything higher, and the adoption quotient for PulseChain will actually be better.
Yeah, I understand that. The closer we can get to the bottom of the bear market, the better. I don't think Richard is going to wait if it's ready, but I think he's going to choose to make additional improvements if like he's not as rushed to make improvements now because of the macro conditions. And so he's rewriting a lot of the validator code in Golang, which is and no longer in Solidity. So it's going to apparently increase speeds up to 200x. And that's something that he might have, as a trade-off, he might not have made if conditions were better. So it's almost a
Yeah,
blessing in disguise, right? But
yeah. I would say just borrowing his idea that delayed gratification basically is just good for everything, personal development, for your crypto wallet, and so on and so forth. I think that thought being applied to Pulse Chain actually will end up, playing out really well too. I
yeah,
mean, and the question is like, why would you want Pulse Chain to be released tomorrow? Like, what do you want to do? You want to dump your hacks, or you want to dump your Pulse? Is that what you
that's
want to
what
do?
that's what some people want. Yes.
Okay, that's fine. I mean, but that's
Not
again,
me.
that's like the against the ethos of the whole project. So
I know it's ridiculous to me. It's people. Yeah, I'm fine with waiting. The better the code is, the more successful it'll become in 2023, 24, etc. What do you think about like the macro level though? There's been talks of because of the midterm elections coming up that they might do some quantitative easing for that, just to make the economy look a little better. Do you think that matters?
I think it's not gonna happen.
Okay, fair enough. Why
There's
is
there's
that?
no there's no way. So the So the problem is that um, you can't make things better in short term and actually to borrow from the future, right? So you could basically say, okay, we're seeing positive effects of the quantitative tightening on the economy, and that's true. We're seeing it right now. Like we're actually seeing people slowing down hiring in some cases, like like Coinbase rescinded a bunch of like offers, and
Yeah.
in truth, it's kind of terrible, right? But in reality, maybe they hired way too quickly and too much. So that's an indicator that the quantitative tightening does have an effect. So if Jay Powell uh, mentions this or something like that, or alludes to that the economy is slowing down, that it will immediately push the markets higher. And people really don't. Normal people like normies, they don't understand what Jay Powell is all about and what the hell he's saying. The only thing
Yeah.
that they see is that Nasdaq is moving higher, and
Yeah.
that's they try to fill in the blank in their minds
Yeah.
somehow afterwards. So during midterm elections, if the market levels out just because he says something positive about themselves doing the good job, and the market reacts positively to it, then that's all they need to do.
Okay.
So I don't think they're gonna be like, oh, wait a second, let's lower interest rates because we did too much. I
Well,
don't see
also,
that in the cards.
there's too much of a delayed reaction, right? It's such a lagging thing. Like you don't see the effects of quantitative tightening until months after the interest rates are raised. So I don't think it's not like they can just flick a switch and then it's like prices
Yes,
go up.
I agree. In the global economy, I agree with what you just said. However, with the stock market, the reaction is immediate because the stock
Oh, because
market
it's
is a leading indicator. So it tries to predict the future. So
right.
like in January when he first talked, the Nasdaq like skyrocketed 4%, and then it dumped like 2%. Like, why
Yeah.
did it do that? I mean, obviously, people just thought that he said one thing, but then they kind of read between the
Yeah.
lines.
Hawkish and bearish. It,
And
it
then,
almost becomes like a prediction, what would you call it? Like a
yeah,
gambling on predictions.
well, the stock market and anything that's volatile is always psychotic in the short term. So that's why, like, I think if you want to be a good investor, you should always be pessimistic in short term and optimistic in the long term.
Hmm.
So, and I think that's what HEX actually is trying to achieve. Like if you can say that, hey, there's on average 6 years that people are staking for, those people are technically optimistic in the long term, and their long term wait period is measured by the number of years that they're staking.
Yeah.
So
I mean, it's a cool metric for sure. Hey, so
yeah.
I think we could end the stream pretty soon here. We're at a minute 23. I just wanted to do one final question. Everybody likes price predictions, right? So do you have any price predictions for the top of HEX in the next bull market?
Oh, that's a crazy kind of question.
Yeah.
Next bull market, when is that? Like 5 years from now?
I hope two or three, 2024, 25.
So first we need to agree on time, right? And
Yeah.
then, but or rather, not agree, but make a prediction. I
Yeah.
think next bull market's potential will come in 4 to 5 years, and we're gonna be
Wow.
choppy for until then.
I think it'll come earlier.
Um, okay. I mean, well, it could come earlier, but the thing is, I always say it's better be late for the bull market than early for a bear market, right?
Facts.
So it's okay. It's okay to be late, and it can come earlier, and but you almost don't want it to be too early because you want to buy something that's cheap enough, right, or inexpensive enough. But Hex price prediction, dude, it's impossible. It's impossible. I mean, we know the top was like what, like 40 cents, 40 something cents,
50-ish.
50 cents, yeah, 50-ish. Um, so here's my kind of like meta thinking on the economy. So I think the Fed, once they finish with their tightening, they will be very careful to ease uh, and to produce more money. I think it will take many years for the Federal Reserve to ever print money again. That being the case, uh, the uh, the fundamentals of free dollars is going to be difficult to execute in crypto world. However, if HEX continues to gain adoption, and it's so early, right? And if we look at the charts, right? If we look at the Bitcoin chart, the Ethereum chart, and the HEX chart and layer over time, it could easily be 100x from essentially from now, or even from the top, right? So the top was I guess 10x from this point. So we're at 5 cents. It was 50 cents, so it's 10x lower. So I would say my prediction is between 100x and 1000x in the next bull market cycle, and you can come up with the price yourself if you wanted to. But that's my very very wide range, and that's just looking at the adoption curves of previous crypto projects like Bitcoin and Ethereum. So I don't see why it wouldn't do that. I mean, but then of course there's PulseChain. What if everybody switches to PulseChain and sells and sell convert hex to Pulse, right? What if it becomes that?
I don't think that's
Then
likely.
but what if PulseChain is like the most amazing blockchain ever created, right? I mean,
It's just a clone of Ethereum. I mean, it's not going to be that crazy.
I mean, sure, but it's written in Golang, so it is faster and it's
It's way
cheaper,
cheaper. Yeah.
right? And it may actually be better than Ethereum too,
I think it will be
right?
better. I just don't, I don't think it's revolutionary enough so that everyone's going to forget about Hex.
Well,
People
the
still need to
point is
store their
that
value.
sure, but why not do it on PulseChain? Like PulseChain may be better in every way.
Hey, I mean, it's always possible, right? I can't say it's impossible.
I mean, if that happens, right? If that happens, like if for example there is a bridge between Bitcoin and PulseChain, and you can wrap your Bitcoin in PulseChain, and it's actually better for what Bitcoin was supposed to be, which is ability to not only to store value but also to transact. Then what likely would happen is that the old Bitcoin network becomes this legacy network that's like a dinosaur, right?
Yeah.
And you just have a bridge where you wrap things in, and it's linked to the old network. But the old network is like no longer hot or interesting. It's like we all say,
Oh
it's
yeah.
a proof of waste.
We're already seeing that with wrapped Bitcoin on Ethereum. I mean, Ethereum is the layer 2 scaling solution for Bitcoin, and Bitcoin almost has a better chance of if you wrapping it and if you wrapped it on PulseChain, it almost has a better chance of being peer-to-peer digital cash because the block times on PulseChain are 3 seconds. Transaction speeds on Visa, MasterCard, about 3 seconds. The problem is, PulseChain eventually will fill up just like Ethereum did. And so, transactions won't be free or near nothing forever. Eventually, if PulseChain is successful, it will become a victim of its own success. And the transactions might be 1 penny, 5 pennies, 10 pennies. That still might be a little too much for peer-to-peer cash.
Sure. I mean, but then again, if you compare it with the Visa and MasterCard, I mean, they're charging 1% of the global world's GDP, right? So, and that's 1% of the transaction. That's not even a couple of cents. So,
Yeah,
I
you're
mean, it's
right. You're right.
still might be better.
It could give Visa a run for its money. Absolutely.
I think it should. I think Visa and MasterCard should switch to blockchain.
Yeah. Well, they're probably thinking about it, but they're probably
They
very
should
far
be
behind.
doing more than thinking.
Yeah,
Yeah.
yeah. So, okay, I agree with you. 100 to 1000x sounds reasonable. When you think that Hex did a 10,000x in the first cycle, let's say every cycle we do 1 order of magnitude less. So, if Hex maximizes at 1000x in the next cycle, well, how much of that are you actually going to capture? Probably not all of it. So, maybe in the hundreds of x's is something reasonable to expect. Just like nobody bought the exact bottom and sold the exact top in this previous cycle. So even though it did 10,000x, nobody really captured that. But a lot of people achieved 1,000, 2,000, 3,000x. So in the next cycle, I can realistically see a lot of people achieving 100, 200, 300x.
Yeah, certainly. I think it's definitely a possibility. And, I hope, as I said before, I hope there's more projects like that because I think it could set the trend.
Yeah, absolutely. Cool, man. Well, thank you for coming on. I really appreciate your time. I'm sure you're very busy. So it's great to hear an OG Bitcoiner's perspective, especially someone that's been in, basically the tech space from the very beginning almost. And really, really awesome to hear that you have the open-mindedness to change your mind and not just think that Bitcoin is the only way. A lot of people get stuck, and it's really good. It's surprising that more people don't have an open mind.
Yeah, yeah. Thanks for having me. It's been a fun conversation. We should do more things like that.
Happy to. Yeah, I just showed your Twitter, but is there anything that you want to show? You got any companies or anything like that?
Yeah, imagehack.com. Been alive since 2005. Just turned 18. Great place to host your images. It's almost cost you nothing. You guys should go check it out. And of course, Mr. Jack Levin on Twitter. Follow me. I could use more love always. Anybody could use more love, and
yeah,
I
not
definitely
hate,
could
guys.
use so. So I mean, hate's fine. I mean, by all means, hate on me, and it's kind of like also love.
Oh yeah.
As long as I.
So for the chat, so Jack introduced me to the concept of reverse trolling, which he does very well. So
yeah, reverse trolling basically is like that there's trolls out there, and you can capture their attention by saying something controversial, and it's almost impossible for them not to speak against you, and then you just destroy them. So you play their trolling mind against themselves, and that
right.
gets you engagement because it brings other people that actually get on your side and
Right,
this and
right.
that. So it's like the other way to call it is feeding the trolls. So if you feed the trolls, and trolls come, right, you can actually build an army to defend yourself, and that's actually ultimately what I think Richard has done.
Yeah. Yeah, I mean, he's feeding them. You even did it a little bit. You said, "Hey, here, look at this hex chart. It's down 88%. How terrible is that?" And then it's like a bunch of people
I
like,
didn't I didn't
"Yeah,
say it's terrible. I said it happens with pretty much every crypto out there for the same time period. But it is
yeah."
terrible if you did buy the top. If you bought the
Actually, yeah,
top and you sold the bottom, then it's terrible for you, right? If you're staking it and you bought the top, it's not yet terrible because it's only paper loss.
exactly. And dollar cost average, guys. That's what I've been saying this whole time. Yeah, your tweet was very simple.
That's right.
It's just if you bought the top, you would be down 88% if you sold today. Fact. And then everybody in the comments is either angry or then they're like, "Oh, wait, this guy actually likes hex." It's okay. I get it. So
For sure.
yeah. Cool, guys. Well, thanks so much for coming again. Like, subscribe to the channel, guys. I've got some merch in the description below. Follow Jack Levin, and I'm sure we'll do this again sometime in the future.
It's Mr. Jack Levin on Twitter.
Mr. Jack Levin, the one and
That's
only.
right.
All right.
One and only.
See you guys.
Thanks. Bye.